Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. It's good to be back, everyone. We got a good show for you today. Our guest is John Carter. He is the president of Simpler Trading. He'll join us at 8:35. But before we get to John, we got to talk about the movers of the day. SRPT is up again. Financials, and they're really moving the insurer stocks ahead of this big storm we're going to get supposedly. At least that's what they expect in Florida over the weekend. So we'll talk about that incoming storm as well and what that means for the market. Got a couple earnings stocks as well. Joel, how are we doing in the markets?
The markets are shrugging everything off as usual. S&P futures are up 3 1/4. Nice range overnight. Pre-market low 56.50. We don't have much down there. We're hanging above the close. Not much in the 60 handle, folks, until we get up to Monday's high at 2371.75. Crude initially got hit on these storms, but I think there's starting to be a little bit of supply concerns here. Back in the $49 handle, 49.28 is your current high. Looking at the dailies here, maybe tracking back up towards $50 here in the crude oil market. Couple highs over 50. Gold and silver taking a little breather. Gold going up near that 1350 level. Quite can't get there. Didn't even reach yesterday's high yet, so that could be a target at 1344.90. And moving on here, silver back over $18 at 1803.5, up 9 cents. Dennis, we're going to go right to these financials, insurance stocks. I don't think I've heard you so fired up talking about a sector, but what happened to these reinsurers?
The reinsurers got absolutely killed yesterday. And so reinsurers take on the direct risk. A lot of times your insurers will pass the risk on. So when you go to your major insurance company, a lot of times what they do is they factor it out, or they send the risk over to the reinsurers, and the reinsurers take it directly, the risk on. And whenever there's a storm, whenever there's an epic disaster, the reinsurers always take a hit. I've never seen them take a hit like they did yesterday. I actually was trying to short some of them on the open, but most of them opened down 2 or 3%. I'm like, well, I'm not going to chase these things. Should have chased them, because RE, for instance, I was trying to short this one off the open. It opened around 246. And it had closed the previous day up at 248. So I was like, wow, it's opening down $2. It seems to be a little bit, too much. So I'm not going to, chase it down here. I was trying to short the 247 handle. Opens about $1 below where I was trying to short. RE, Everest Re, if that's how you say it, reinsurance, fell another 15 points. So if you look on the charts here, just looking at these things, these are epic moves. AHL, I actually have this one in my investment portfolio. I've had it in there for about a decade. It just got absolutely annihilated yesterday. 10% down yesterday. If you want to keep going through these, R&R is another one. Renaissance Holdings that got murdered yesterday to the tune of about 13 points. Some direct hits from Florida that have obvious exposure in Florida. HCI Group, look at this one. This thing closed the previous day at 38.44. This thing lost $7 yesterday. So you're talking about like an 18% move down in HCI. These things are like saying these are going to be like, this is going to be one of the biggest disasters of all time. If it's not a disaster, these things, might be some opportunity here. But holy cow, XL, HRTG, UVE, all these annihilated. And I'm talking major annihilation. Like the big ones got hit too. Like the Travelers Group was down $3 or $4. Allstate was down, but nothing like the reinsurers. The reinsurers got absolutely murdered.
And well, first of all, just from a trading tactic perspective, I'm looking at this RE, Dennis, and I know you put your opening order in at what, 247. But look at that opening print.
I can't remember exactly, but it was about $1 below. It opened about $1 below where I wanted to be.
That was the exact high of the day, is what I wanted to point out. 246.13 open. exact high of the day, 246.13, double the average volume. Let's just look, looking at this from an opening print perspective. AHL, that opened up at 45 even. High print, 45 even. R&R, let's just look at that one. R&R opening print.
They all open right now.
Yeah, they're high tick. And that's just the institution saying, you know what? We're out. We're out. And
that's institutional money moving.
That
like when they
money.
fall like that, that's big money moving stocks. That's not retail, just saying, oh, we think that. That's somebody saying there are some problems here. Obviously, they already took a hit from Harvey, but that's nothing like they were taking here from, on Monday when the word, obviously, this Category 5 storm is in the sights of Florida here. So this is an epic disaster for these companies already. And we haven't even had any disaster yet. So, and it's not only the reinsurers, there's other stocks that actually benefit from this.
Yeah, let's talk about that.
We saw Home Depot, we saw Lowe's, both disclosure, I'm long both of these stocks as a trade. I've actually got an exotic hedge on because I shorted some generic to GNRC against it, but I was long GNRC for a bit too. So GNRC is trading up $1 as well. And then, so the cruise lines get hit, food stocks rally. I mean, there was a whole, hurricane trade yesterday. Like everybody was talking, overall markets, but the hurricane trade was really the trade yesterday. Insurance companies annihilated. Cruise ships got hit really hard. Reinsurers got really hit hard. And then you had, the companies that actually are going to, benefit from potential cleanup, like Home Depot, Lowe's, lumber liquidators, all of those having great day yesterdays. And the food stocks, think of Campbell Soup. Campbell Soup had a great day yesterday. People probably going out to the shelves there and picking up, some canned food.
Wait, I have a question. Why was this trade yesterday? This storm had made landfall, over a week ago.
No, we're not talking. We're talking about Irma.
Okay.
This is not talking about Harvey. This is not Harvey.
You go completely off the grid.
Harvey was
You're getting all this love in chat, and now everyone's going to...
No, I wanted to... You mentioned Harvey. I wanted to just clear that up.
No, this is Irma. Fine. Sorry if I mentioned Harvey.
Okay.
They already had a trade from Harvey. Some of these things, already got hit. Home Depot and Lowe's had a little pop from Harvey. GNRC had a little pop from Harvey. And Home Depot, Lowe's had a little pop from Harvey as well. And the insurers got hit a little bit from Harvey. This is nothing like they're pricing in for Irma, though. They're saying Irma is going to be way worse. They wouldn't be pricing these things in like this. So, whether they're right or not, we hope they're not right, for everybody's sake down in the Caribbean and in Florida. But the market is pricing in an epic disaster.
You know what? And John Dotson's talking about Jose. Another one after Jose. But
what's going on with the world here?
I don't know. I think Trump created this to take some pressure off him or something. I don't know. But Texas Linda, she says, thanks for the GNRC. I
bought the open yesterday in GNRC. I did. I actually was one that I got. I had a whole bunch of OPGs out there, opening only orders, trying to get, the hurricane trade on. And the only two stocks I got were Walmart and GNRC. You had to chase everything else, and I don't like chasing. You know that. So GNRC I got opening low tick, took zero heat. Stock's up 50 cents before I could blink. Anyways, scalper blood and me, I quickly take the profits and run and move out there. And then Walmart, I bought the opening tick as well there, zero heat. Walmart starts running up 40 cents and I'm like, what is Walmart? 0.5% move in like 2 minutes. You got to book the profit, especially as a day trader. And it just kept running. I mean, Walmart ran all day, and that's a defensive play as well. Walmart, the shelves are probably empty in Florida right now, those Walmart stores. I saw a picture of the Target store down there. It's empty. So, and it's got to be, people just, there's a lot of scared money. There's scared people out here, and there's some money being made from the scared people. I hope, it's not going to be the disaster that's saying the reinsurers are saying it is. But when I look at those reinsurance stocks, it makes me think that Irma is not going to be pretty.
So for context, according to a just cursory Wikipedia search, on the last Category 5 storm to make landfall in the U.S. as a Category 5 was Hurricane Andrew in 92, and then before that it was Hurricane Camille in 1969. So the Category 5s don't make landfall in the U.S. as Category 5s very often.
All right.
And it may not. And we don't know. It might not take the detour they're saying it's going to take. It's amazing, these meteorologists being able to call this track, though, Joel. Like, it's pretty impressive. Like, it's going to go straight. We're going straight west, And then when they're saying it's going to take the loop that goes straight north, on Saturday or Sunday when it goes to Florida, it's impressive that they can call, the exact track like that. And they usually get the things pretty darn right. So at least everybody's got a nice warning down there. Like, I'm sure there's a lot of people evacuating, and hopefully most of the people get out, because I think it's going to not, it sounds like it's going to be really bad.
Just keep your eye on your Benzinga Pro here, because Brent is an expert storm tracker here, and he actually just got back from New Orleans, and I'm glad he's back. But just if you're trading these reinsurers, you're trading any of these stocks that are related to the storm, you really got to be careful whether long or short side, especially on the short side though, because if they come out and they downgrade these things, there's going to be some rallies in some of these issues like you've never seen before. So,
what do you mean, if the analysts come out?
No. If the weather analysts.
Oh, yeah.
Yeah.
If the hurricane isn't as bad, like all of a sudden it takes a different track. Imagine those reinsurers that just lost, what was the one that lost 18% yesterday? HCI. This thing lost 18% yesterday. I don't believe there was a headline. Check Pro. I think this was just off of Irma, fears of Irma. I know they have exposure in Florida. I'm pretty sure that was simply just off Irma. That's
HCI
crazy.
Group, yeah. I don't see any headlines.
Just off fears of Irma. Here's a stock that typically moves around 50 cents or $1 a day. Lost 8 points yesterday. It lost 18%. They're saying like this company is in trouble. Because they're going to have to put out so much money for the devastation. So if for whatever reason it's not devastation, be an opportunity here.
All right. So we are at 8:12. We did some nice hurricane coverage. Are you done yet, Dennis?
We didn't talk to cruise lines either, though. I want to stick with the hurricane trade, because this is the trade. This is how money for short-term traders are made. Being able to anticipate events like this, and obviously, and profit from it. And if you were on it yesterday early morning, maybe the money's already been made, but, it's a good learning experience here too. Like, I made money in GNRC yesterday because I've seen GNRC pop in other hurricanes. So, it's the previous experience, education that you can pick up from that. But, look at the cruise lines. RCL lost $5 yesterday. CCL lost $2. NCLH lost another $3 yesterday. Cruise lines got hit. Airlines got hit yesterday. LUV was down. AAL was down. Delta was down. All the airlines got hit too. So, there was total hurricane trade happening in a lot of different sectors yesterday.
Yep, and we also, I don't know if we went, it spilled over, some of the financials that, may have some exposure to this.
The big banks even got hit. They have some exposure too. Some of those big banks do insurance as well. Now, most of them probably send it out to the reinsurers after, but, you're exactly right, Joel. Check out the chart of Bank of America.
Goldman Sachs is the one that I had up, and I'll bring up Bank of America.
Oh, that got hit too.
Yeah, Bank of America approaching support at 23. I think it got a little Kramer love yesterday, so that might be a reason for it getting a little bounce back up here to 23.50 level. And JP Morgan also took a hit yesterday. So, man, the bots are reading the weather radar, and they are hitting these stocks, and let's just keep our fingers crossed that this thing, turns course and not only, helps the people in those areas, but, gets a recovery in a lot of these stocks.
Well, did you say your niece is down there, Joel?
One of Dana's good friends goes to school in Boca, and she's out of there. She booked a flight. She's leaving this morning. She's going to stay for a week. So who knows what what happens, what's going to go back to.
But away for a week.
Yeah, she's lucky. I mean, what about, people that don't have, the means to hop on a, probably paying up for an airplane like that. They're probably, the prices are going up, and I don't know where. Maybe it'd be safe in the middle of the state. I don't know, but
that's what I'm looking up right now. Is it going to hit the Gulf or the ocean side? Of Florida?
I don't even know if they totally know yet.
The west coast or the east coast, because
they're predicting east coast. I thought, but
that's what I'm trying to find out.
I think these things can take some funny turns too. So the question is, though, too, like, remember that one hurricane a while ago, Spencer? Do you remember Disney World got hit a little bit, too, on that one hurricane? Because usually the middle, Disney's in the middle. It's 80 miles to the east, 80 miles to the west, usually fine. But that one hurricane, like 5 or 6 years ago, actually hit Disney World, too, a bit because it was so big. Does this one have the potential to do damage in the middle of the state? I haven't heard that yet, if that's possible or not. But, Disney's right obviously in the middle.
Are you talking about Wilma? Is that what you're talking about?
It was one that hit Disney. I remember, Disney World like closing down for a day. And maybe if you Google, just
Yeah.
because of the hurricane, I was like, I've never heard of that before, because Disney's in the middle of the state. It never gets hit from hurricanes. My parents have a place in the middle of the state. It never gets hit from hurricanes, but they had a little damage on that one hurricane. Does this one have the potential to do damage in the middle of the state? If anybody in the chat knows, you let us know, because Disney has not been hit on this. DIS is just hanging out there. It's, it's an ugly chart just for other reasons, but it hasn't been hit at all.
Yeah, that we've been talking about that. That got down to 10090. We talked about it with Nick yesterday, and this is just not a good technical formation. You found, good support, and you keep bouncing off it, but now your closes are getting much, bearing down on the lows of those moves. So keep an eye. The low of the move has been 10050, and that's when they hit it on earnings day. Buyers have stepped up ahead on 2 or 3 occasions, but this is as we'd say in this one, man, this chart's looking heavy, and
this is an ugly chart for multiple reasons. I have multiple reasons to put my short. I think I'm downgrading Disney to a short, in my own opinion. I know they were talking it up on Fast Money last night. I think I'm fading all those Fast Money guys on this one here. I don't like this chart at all. It had the big down move. It's hung around here too long. This thing goes under 100. It's going to 90.
And look, I just pulled up the monthly chart there, and you had that 100.5 low. And if it's good that if you look at different perspectives on charts, you had a green candle 2 months ago. You had the bad report in August, and now you're starting another candle. It is showing a little bit of green here for September, but look at between 90 and 100, folks. This is a monthly chart. There's some daily lows in there, and perhaps some daily stopping points, but what was another stock that we talked about? It went through 50 and we thought it was going to 40. Amberilla, right? Remember when that got
straight down?
Straight down. When you see a 2-month candle, it could do that in a month. And that's what Amberilla did. Now it's back at 40. Dennis, we should have shorted that one.
You know what? And this is something, that I keep, having to pound into my own head. When stocks come out with bad news, or when stocks, why try to be the hero and call the bottom? And you wait till they stop going down. And, and I did this wrong. I do this wrong all the time. Like even in my investment portfolio, I was like, oh, Save's getting cheap. I messed this one up. Spirit Airlines. I threw a little bit of stock in my investment portfolio. I was like, I don't have any airline exposure. It's cheap. I like, valuation perspective. I still like all that. But my timing was wrong. And I put this in my portfolio just like a month ago at like $38. It's 32. It never stopped going down. So there was no reason for me to come in there and, add this to my investment portfolio at that time. Sentiment had turned towards it, and it's ugly. So, I still do it myself. And, we got to, stop ourselves from doing stuff like that. Stocks are going straight down. They continue to go down often. Sentiment turns on them. It's hard to get it to turn around. So you can say valuation is cheap. You can say a lot of things, but a lot of times you get those stocks cheaper.
And Dana, if you were just focusing like of the low of the moves and then a little consolidation, because Save did give you, this is a daily chart, it gave you one nice update after it hit 34, it ran to 36, people getting all comfortable in it. But let's say even you're in it for a swing trade, let's say 34.5, 35, goes up to 36. When it comes down and takes out that 34 low, I mean, you got to go. And you had plenty of chance to do that. Even the day that it took out, the next day it came back to that area. So you can do, Dennis, you're talking about long-term trade portfolios, so you don't keep an eye on it, as much as on a daily basis.
I maybe have too many stocks. I should listen to Kramer. He always says you can't have more than 10 stocks in your investment portfolio, or you can't handle it. Kramer would vomit if he looked at mine, because I think I have 92 or something.
You need to trim that down, man. How do you keep track of that? I don't even.
I don't even know. You don't. He's right. I can't keep track of that many in my investment portfolio. But that's what keeps me in them. He doesn't say, because I'm a day trader. If I only had 10 in there, I'd trade out of them all the time. It's because I'm not paying attention that keeps me in the game.
that's.
I don't even notice a thing goes up 20% in my favor on some stock that I have in my portfolio. I notice because I'm watching the markets, but I wouldn't notice in my investment portfolio. I'll count my stocks tomorrow, guys. I'm not joking. I think I probably have 80 or 90 stocks in my investment portfolio. But the way I see it is like I'm kind of in the market. I've kind of, I've built, and it's a lot of preferred stocks, a lot of, I've built this kind of defensive portfolio over years, and I do trades in it. I had adjusted and stuff, but overall, it's like I don't pay any management fees. Like Kramer says, they have over 10 stocks. Go to mutual funds, but I'm not paying a 1%, 2%, 3% management fee. I'm my manager, and I feel like I can do a better job. than watching the markets. And I think I do over time. I think my beta is a lot lower than a lot of these other mutual funds. And I think I still perform pretty well. But mine's definitely income dividend centric more than anything. Not that I'm super old, but I'm not young either.
Hurricane Charlie, 2004. I don't know if we mentioned that. Be
That's
vocal.
The one that hit Orlando. That's the one that hit Disney.
Yep.
Okay, so we do have precedence there. Disney has been hit. Now, this is coming in. Maybe that came in from the side. This looks like it's coming in from the south. So maybe Disney's far enough north that it doesn't get hit too. We were, considering the east-west thing, 80 miles, but it's all, we're 300 miles north of Key West there. So I got to think that, in all likelihood, maybe it's too far north, and that's maybe why Disney's not getting hit either. But regardless, I just don't like the Disney chart whatsoever. So, hurricane or no hurricane, I think the Disney chart just looks heavy to me.
All right. We did.
Might be short on today. We'll see.
All right. That was a stormy beginning into the show, but let's.
All right. You made me laugh out loud on that one.
Now,
okay. Where do you want to go?
Spencer's shaking his head. I want to do some earnings plays after the close.
Play. They're not playing anymore. PLAY. Dave and Buster's.
Yeah, Q2 EPS 59 cents, a 2-cent beat, sales of $280.8 versus $281.95 million. So a slight miss there on the sales, comps up 1.1%. Their fiscal year net income was raised a little bit, and their comps were lowered from 2 to 3% to 1 to 2% for the fiscal year.
Stock trading down 6% in the pre-market. Price don't lie, Joel. They don't like it.
Yeah, pre-market low, 52 in a Q, and then we got a quick bounce off that up to 55.5. Just trying to find some buyers and sellers here at the $55 level. What I'm going to be keeping on, if you get a pop to 56.45, which you very well may, that was the former low of the move. So I think before you even get any serious thinking on the long side, not only get above that, but close above it. Coming back on the downside, man, at 52, when you have those quick bounces like that, I think sometimes, little buyer's remorse. And when you come back down, you might find buyers ahead of it. You haven't been in the $50 range. Wow, 56.45. Trying to find last time we've been under 50. Oh, I like 52.31, Dennis. That was your low in February. So I'm sticking with the potential low of the day in there, 52.25.
These are short-term trades. Again, the stock has got some bad news. It's been in a downtrend. It's continuing to go down. There's no reason for me to come in here and throw this in my investment portfolio. So I'm sticking away from play right now. The adult Chuck E. Cheese is off my list, at least for now.
Yeah, and I've never been a big fan of that place either.
I've never been in one.
Wait, for Chuck E. Cheese?
The adult Chuck E. Cheese, we're saying play.
Okay, never mind, because I saw a commercial.
I've been to Chuck E. Cheese.
I saw a commercial yesterday for the first time in I don't know how long, 10 years of a commercial for Chuck E. Cheese, and they're marketing for like adults, like for parents, and like their new expanded pizza menu. I don't know. I thought it was silly, but that just was funny yesterday. You're right. Dave & Buster's is the adult Chuck E. Cheese. There's one actually near us, Joel. I don't know if you've been recently.
Here?
Yeah, well, in Novi, there's one near us.
No.
Okay, we should go sometime. We'll go. I'll take you.
Luke likes to go there, right?
He does.
Okay.
HPE.
Yep.
All right. HPE reported Q3 adjusted EPS 30 cents is a 4-cent beat. 26 cents was the estimate. Sales of 8.2 versus 7.49 billion dollars. So a beat on the top, a beat on the bottom. They see the Q4 adjusted EPS coming in lower than the estimate. 40 cents was the estimate. 26 to 30 cents is what they're saying for the current quarter. And then for the fiscal year, they are missing as well. $1.44 was the estimate for the fiscal year EPS. $1.36 to $1.40 is what they are seeing.
If you're looking at the chart and saying, what the hell happened 3 days ago, that was a spinoff. So if 18 to 14 isn't a real drop there, that was the spin-off there of that company, that software company that they're merging there. So but this is real. This is the earnings report.
And what I'd say, my number, 14.40. We're trading at 14.37. That's up 33 cents. Since the spinoff, you've had two highs, 14.39 and 14.40. Now, it's not a gap fill above that because of the actual spinoff. But if, in fact, you could clear that area, don't have much information, 14.85 is your pre-market high or after-hours high. Got up there again and also tried off the 4 o'clock open. So I like it above 14.40, target 14.80, 14.85. coming back on the downside, man, this thing is traded like a book here. The low on the first day of the spinoff, 1382. Low on the second day of the spinoff, 1383. So digesting the new price action.
Jumping over to, there was one of, the underwear company, Joel, your underwear company, Duluth.
Well, not my underwear company, but DLTH got some good numbers. Tell us about it, Spencer.
Yep, Q2 EPS 13 cents versus a 10-cent estimate. Sales of 86.2 versus $82.5 million. So beat on the sales, beat on the EPS. Fiscal year EPS coming in line with the estimate. Fiscal year sales coming in line as well.
Speaking of commercials, did you see the new E-Trade commercial?
I love E-Trade commercials. No, I haven't.
You did see it? So
I don't think so, no.
Big yacht going through the sea, and this guy's just partying on it, just going absolutely crazy, and blowing all these people out of the water. And at the end of the commercial, it says the dumbest kid in high school just bought a yacht. And
I did see that one.
And then he jumps.
I did see that one.
Off.
They had good commercials.
They just jumped off the back of the boat. But anyways, Duluth got a pop to 23.33. It looks like a little people thought that was a little bit overdone. So we're coming back. We're getting some price discovery here at the $21.5, $22 area. This is a big gap. It's busting out over 20. So I think longer term, I'd try and wait to come down to the lower 20s before I get really interested in buying it. But it has a pretty good lead on it, so we won't see that today. Basis to daily charts, 22. I see a double top at 2203, 2204 back from May 9th to May 10th. That could certainly be a target if you're long the issue.
Jumping over here to
Sarepta?
Yep.
Alrighty, yep. They had some drug news this morning. Their drug SRP-4053, which is a Duchenne muscular dystrophy drug.
Is that their main drug?
Well, remember they also have Exondys.
Okay, so they got a couple cooking.
But yeah, and this achieves statistical significance on both the primary and secondary biological endpoints. So great news for Sarepta. So after you go through that, I can give you a list of some other companies with Duchenne muscular dystrophy drugs in the pipeline as well.
What a stock this has been, and I messed this one up big time. So I bought this. This was one that when it gapped from 30 to 60. It came back under 30, and I threw it in my investment portfolio saying it came back to where it was before the gap on the approval. And I feel like, there's, and then it, hung out there forever. I sold some up there when it got a big pop, like 37, 38, but it came all the way back at 28. I should have rebought the stock I sold. And instead, I got back up and I ended up selling it all. And here it is, $47. I'm kicking myself here now because this wasn't for a trade. It was for an investment. I should have stuck with it. This is why I got 90 stocks. I don't have to look at them all, but I was looking at this one all the time. It was all headlines. I was looking at it too much, and I ended up selling it out. Should not have. Mistake. I could have made a lot of money on this one.
Boy, I tell you, this thing runs. Now, I don't know if you're going to get that similar run that you had. So if you're shorting this thing, just be cognizant of what it did back in September last year with drug approval, 63.78. The bots got a hold of that one and ran it, then brought it all the way back down. I'm looking at this basis, a weekly chart. 44, if it pulls back into that area, I know we're way above it. Could be a potential support area because you had a triple top back down there. But be careful. I mean, this thing really ran last time. Go to your longer term charts, the weeklies. 50. I mean, I'm just throwing a number out there for a half and whole number for a target. Spinner says 20% short interest. They got to be feeling the hurts this morning.
A lot of people have been feeling the hurt if you've been short a lot of different sectors, and specifically the drugs as of late. I mean, the drugs stocks have just been hot. They cooled off a bit yesterday with everything cooling off with fears of, not only Irma, but the nuclear war. But overall, biotechs have just been unbelievably hot here. It's a little cooling the last couple of days, but hot, hot, hot. Sarepta continues here. Hard to fade these. I'm not jumping in here and chasing something up 14% like you said, though, Joel. Seems like when the dust settles, sometimes these things do pull back a little bit and give back some of those gains, and that's the better time to strike. But impressive move here this morning for Sarepta. Let's give you the imbalances hot off the press here. 830.00 right on the money here, and they just came out. Not seeing too much jump out to me. CRM, small sell and balance, 25,000 shares. Home Depot, 42,000 to buy. So that hurricane trade looks like it's trying to continue. Here this morning, Lowe's also 25,000 to buy here this morning. Let's go look at like GNRC, for instance. That's got a small buy amount, 6,200 shares. I'm just trying to look at some of these other hurricane stocks there from yesterday. Yeah, the HCI is another 10,000 to sell in HCI. So the selling pressure continues in that one here this morning. It's down another buck. Or another 30 cents, another 1%. That's pretty well it. They're small here yet.
Dennis, if you looked at the VIAB trade, ARB trade, if not, why not? Chili Trader is asking about
I mean,
that.
it's 10 points now. It's blown out. I will say I actually got a locate this morning on VIA. So you're starting to see the stock, and only on a partial. So there's not a ton of stock of VIA out there, but there is some stock of VIA out there. So VIAB is still ugly. So if you're looking, and what we talked about before, I was like, I was like, this is crazy that this thing's, typically traded with a 3-point spread, blew out to 13. What happened was the VIA became hard to borrow and hard to locate. And there was no borrows on the street. You had a short squeeze. You probably had buy-ins on the one stock. So you literally had a stock of the same company, VIA. One has voting rights, one doesn't. That's the only material difference between the two stocks. And one going straight up and one going straight down. Everybody's scratching their head what happened. That's what happens when stocks become hard to borrow and you can't borrow them in the streets. They have ARBs in there getting killed, probably even, high frequency ARBs getting killed, stat ARB getting killed all over the place in that thing. Obviously, because it usually takes for 3-point spreads, 13. Question was when it was going to become easier to borrow. Now that it's starting to become a little bit of a borrow on the street, you start to think that maybe it could come in a bit, but I'm not sure if I'm coming in. It could go hard to borrow again tomorrow. So VIA still just kind of hanging out here, where VIAB is making new lows. Both charts not looking that pretty, though.
Yeah, and just, pointing it on, I mean, you never thought it would go to a $10 differential. What does it
Never.
mean? Yeah, so it could never go to a $12 differential. Have you talked to Rob Friesen at all about this one, Dennis? Does he have the pairs trader over at Bright Trading? Does he have probably the same take as you on it?
Yeah, I talked to Rob about it. I mean, it's the same thing. It's the borrow. It's all about the borrow because we're obviously we're looking and I have multiple places I can go for a locate, and I couldn't find it anywhere there for a few weeks. I am getting a borrow there now, so I am getting a locate on the VIA, which makes me think that's maybe why it's come in a few points already, because it did start to come a little easier to borrow here, but it's still tightly held. VIA is mostly Redstones. So the 80% owned by Redstone. I speculated that maybe Redstone said, I'm sick of my stock going down. I'm not loaning my shares anymore. And if, all of a sudden 80% is gone and not being able to borrow, it's already tight float. Maybe Redstone caused this. I don't know.
All right.
That's all speculation. We'll never be able to know reasons for who's loaning stock and who's not loaning stock. But when 80% of VIA, the voting stock, is held by one guy, Redstone, and all of a sudden a stock that was always easy to borrow is hard to borrow, it makes me think that he might have said something, don't lend my shares anymore. Because, people lend their shares because they get paid to lend.
They get paid, yeah.
They pay to do it. So maybe he was just pissed off. I mean, my stock's been going straight down. I'm not lending my shares to these shorts anymore. And you know what? That caused a huge squeeze in the VIA, if that was said.
One stock here for Downward Dog. He's been very, very patient here. I have no idea what Zayu Group Holdings does, but if it gets
what's the symbol?
ZAYO. Brentster, you know what that company does? I've never heard of it.
I've heard of it, but I don't even know if I've ever traded it.
All I know is if you could get rid of that seller at 34.50 that's been there 1, 2, 3, 4, 5, 6, 7 times over the last couple of weeks, it looks good, but it just looks like they have like a infinite amount of stock to let go at that area, trying to get through there. Nice thing about it, if it does pop through there and it pops on volume, you want a tight stop. You don't want to wait for this thing to go all the way back down to 34. Yesterday, though, it did get to 34.57, 34.44 close. I mean, looking at the technicals here, sure looks like it's trying to break out. And you could see 35.06. That was your high on May 9th. So we got a guest coming on here at 8:35. So that's someone we haven't talked to in a while. John Carter, president of Simpler Trading. So we'll be back with Mr. Carter. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. And thank God we have Spencer Israel here back working the boards. We got John Carter, president of Simpler Trading. John, down in Austin, Texas. How you doing today?
Hey, Joel, doing good. Thanks for having me, and we're just glad that we're staying dry in this part of Texas.
So are you guys, do you see an influx into the city from people from Houston, or how's the city of Austin offering support?
Yeah, I was on the store that's doing the most is HEB. That is Howard Edward Butt, who started that chain a long time ago here in Texas, and they're handing out toilet paper and supplies in unmarked trucks. They're doing a really good job with the community. And then we've had friends from Houston, friends of friends that have been coming into town and crashing out and things like that too. So everybody's just kind of trying to help each other out.
Okay. As far as market related plays, I asked you what you've been looking at, and from your history in the market, you said Generac Holdings. Dennis talked a lot about that one. Did you try to play the stock outright? Some options? How did you play it? And what are you looking at for a target?
Well, typically for a stock like that, we always look at, because the news is known. You don't know exactly how intense the storm is going to be, but, everybody knows the storm is coming. And so you'll usually get a little bit of a bump, prior to it hitting the shores. And it's kind of like a buy the rumor, sell the news. Once the news hits, you just kind of flip it out. You're trying to make $1, something like that, either on the options or the stock. This time around, since it hit so much harder, you obviously had a lot bigger surge. And now that we got Hurricane Irma bearing down on Florida, I'm looking for it to kind of continue heading higher. I think we're at $42.05 as of yesterday, looking to see if we can get up to that $44, $45 level this week.
All right. Also, moving on, just overall market thoughts here. Trading range for the most part, when you look at the S&P 500, and it's a big trading range at that. But so far, get down under 24 and a quarter, you're finding buyers, and this 25.75, 25.80 level has been very pesky on the upside. So tell us here, we're kind of like still in the middle of the range here. How you playing it? You waiting for the top of the range here, or a little bit of downside from this level?
Well, for yesterday, over the weekend, nuclear test notwithstanding, I was looking to see if the S&Ps could go up and tag that 2,500 level. Obviously, that did not happen yesterday. I want to see if that's going to be something that could take shape over today and tomorrow. I think that we get up there first, and then we could actually roll over into a fairly extended sell-off. The time of the year is there. The chart structure is there in terms of distribution at high levels. And that's what I'm waiting for. I think we can get one more little poke up there, but then we got to really pay attention to the downside.
All right. And stocks that you're looking at for a potential move on the downside, one that you've been keeping an eye on, Alibaba here. Boy, it just keeps going. Had a great, it wasn't a report, but they're doubling their revenues and sales. It got the pop, hit 177. What are you looking here? What is making you look for a potential breakdown?
Well, we've got a couple of stocks where we've had, Baidu, Alibaba, Nvidia, a handful of stocks where a lot of money has been pouring into, and it's got these great moves that have been higher. They've been fun to play to the long side, but they also, at some point, when people go for the exits and the trade is this crowded, it can have a huge flushes, greater than expected moves to the downside. So on something like an Alibaba, we've got that big spike high there. We've got an open gap down at $160. Mm-hmm. So I am looking that the stock can roll over and at least fill that gap. But what I've seen when something like that, like a normal pullback happens in these kind of stocks, you start getting a lot of the high frequency traders piling on. They start searching for liquidity and they go on a stop run, and that stock can drop fairly decently. And we haven't had a retracement in that stock. Really since it broke through $100. So that's one I've been looking for.
Okay. I've been waiting for it to fill the gap between 125 and 135 after it had that announcement about the earnings. But yeah, there is a gap down there to 160 for people that want to side with John here and looking for potential short. I see a triple top in here, and it's a really high price stock, so it's hard to get exact areas. But 172.39 through 72.90. You had a series of 3 highs in that area. So above there, I don't think I would hold out for a stop at the all-time high of 177. A lot of talk about, currencies and the weakness in the U.S. dollar here. And I know a lot of people are trying to pick a turn. You're looking at the Japanese yen. Tell us what kind of setup or what you're looking to happen in the yen.
So I look at both the yen futures and then dollar yen. For people that don't know, they're the same thing, even though one chart is the inverse of the other. So for this, I'm going to talk about the yen futures.
Okay.
And what I've been looking at here is that the yen has been the first mover in terms of being a leading indicator for these markets for some time now. And then when there's strength in the yen futures, we're seeing weakness in the S&Ps. So yesterday, the yen was up over 1%. You saw the markets down under pressure for most of the day with that rally towards the end of the day. The yen right now is setting up like a big weekly and daily, what I call a squeeze, and it's just a big narrowing of the Bollinger Bands. And when that happens, it typically is going to release a lot of energy. And if this energy goes to the upside, I think the markets are going to get crushed, like S&Ps and the NASDAQ. And so for me, there's really no point in even looking at the news in terms of, oh my gosh, what's the latest that's coming out of North Korea and all these other things, because the yen is going to tell us exactly what's going to happen. And I've got that in the left-hand corner of my screen and just watching to see which way it's going to go. If the yen explodes out of this consolidation, the markets are going to get crushed. If for some reason, and I don't think this is what's going to happen, if for some reason it starts to fall really quickly and come back down to the 90 level, then the markets are going to rally. That is not the scenario that I'm looking for, though.
Why, though? Why the yen? Why do you go to the yen?
So this used to be something back when carry trades were all the rage. We watched Aussie yen a lot, and a lot of it was just a function of risk on, risk off. Were funds putting on, they wanted to get more risk-based assets. If so, they're getting out of yen, they're getting out of gold, they're getting out of bonds, and they're going into riskier assets. So it's as simple as kind of measuring risk on and risk off and all these different funds. Because really, that's what's moving everything. Yeah, there's going to be some news that's going to cause some blips here and there, but this is all based on a macro level of what these hundreds of billions of dollars in funds are moving in and out of, and the yen gives us a good early indicator as to what they're doing.
Could you just go over that carry trade again real quick? That's a term we haven't used a lot on the show.
Well, so carry trade, this is a very simplified version of carry trade, but carry trade, back in the day when we had this thing called interest rates, what would happen is you'd go out and say, all right, let's borrow a bunch of yen at 0.25%. And now we're just going to throw that, load up on some leverage, put that into the Aussie dollar, which had an interest rate of 4%, and they would sit there, and that was kind of their carry trade. And they would the Japanese yen and the Australian dollar would have movements based on that trade, and whether that trade was being put on or unwound, those currencies, would have a big impact. And if they were putting it on, and then they were using those funds to then go buy stocks and things like that, or if they were taking it off, they're having to sell those stocks. And so it's just kind of, and again, it's a very simplified version of it, but it's this complicated entanglement of all these different asset classes that are bought and sold based on how much leverage and how much money they were borrowing at that low interest to put into riskier assets.
And could that, kind of similar with the banks getting, the really cheap money from the Fed and just turning it around and investing it in interest bearing, whatever they can get, just locking in that spread there as well?
Very similar. I mean, the part of the enticement of it, it wasn't so enticing once all the world interest rates got crushed.
Right.
Who knows? Maybe now they're putting it all into Bitcoin.
You
which would be a
mentioned
really smart trade.
Bitcoin. What's going on with Bitcoin, John? We need an expert on the show, and Johan Smith just asked about it. I see the ETF. I don't have the actual Bitcoin. I see the ETF got up to 1,000. So if you're using psychological levels, yeah, well, after the fact, Jack, 1,000 was a good short. Okay, it's come back down to 700. That looks like pretty good support. This is just basis the GBTC. What are you doing in Bitcoin, John?
So I actually really like the cyber currencies, cryptocurrencies, cyber currencies, whatever you want to call them. First thing with GBTC to be careful is that is supposed to only be trading at 1/10 the value of Bitcoin. So when it was trading at 1,000, that was assuming that Bitcoin was trading at 10,000. And so it'd be like GLD, trading at 300 when gold is, really should be trading 1/10 of gold. So part of that stock to be careful of is it's very thin and nobody actually really understands its value. So it's literally, a lot of times you can say that a stock is, say, overvalued and it's subjective. It's literally overvalued. It's supposed to be trading at 1/10 of the value of Bitcoin. So that's obviously a problem. From there, there's different brokers you can use. I like Coinbase just simply because, and it's not really a broker, it's more of a wallet. But they're Silicon Valley backed. You can go in there and exchange dollars for Bitcoin and Ethereum and Litecoin. And the patterns are very, very similar to stocks in terms of you're getting exhaustion moves, all that kind of stuff, but on a much exaggerated level. So if you understand stock patterns and you understand kind of trader psychology and behavior, they're a really fun market. Obviously, they don't go straight up, and so you play both sides of it. But I was on a boat party this weekend. There were 40 people on the boat. Nobody traded options. 7 people traded cryptocurrencies. I mean, it's insanity.
Enough said on that. Let's just move over to other stocks. Financials have really taken a hit yesterday. That's hurricane related. I think on Friday though, I think you had a little bit weaker than expected jobs numbers. So I think I see the chance for a couple, 1 or 2 more rate hikes coming down to 35% now. Give us a take on we could do the XLF, or if there's any other particular financials you'd like to take a look at.
Yeah, no, XLF is a good one. And I look at XLF as kind of the health of the market. The 3 big sectors of the market are tech, energy, and financials. Those make up almost half the market cap of the entire stock market. And the fact right now that the financials are, really from a daily perspective, they've got a pretty massive head and shoulders top. They're breaking down. I just kind of look at this as, is it a function of Fed speak? Is it a function of, the markets are so efficient at pricing in today what they're seeing 6 months from today. And so anytime I see something like that, I just kind of ask myself, like, all right, is it something where they see that the global economies are getting stronger? Typically raising rates is actually going to help the banks in terms of the profitability on their loan spreads. This is something that I've been looking at where it's one of many red flags. I just see the markets as a whole as an index where there's an interesting study for every year that ends in a 7. Okay. So 2017, 2007, et cetera. We've had these massive sell-offs in September and October going back 70 years. Now, is that something that's going to play out again this year? We can't discount it, but I look at something like the financials, and the financials are potentially leading the way and giving us a huge red flag that that's what's about to happen.
All right. We've been on the line with John Carter, president of Simpler Trading. John, it's been a while. Glad we have you on. We'll talk to you again soon.
Thanks, Joel. Have a good one.
All right, 851 here, Dennis, and the S&Ps are just on a relentless move higher here, going into the 9:30 open. Did we get a shift to some big buying balances?
No, not really. BTFD, Joel. Isn't that what happens? Hurricane disaster, they'll buy the S&Ps anyways. But nothing scares this market. We know that. Hurricanes, nuclear war, nothing. S&Ps, obviously it sold off yesterday, but how long does the sell-off last? That's like always the question here. That being said, jokingly, we always talk, the S&Ps are relentless, but we did not make a new high on that last move. And that is somewhat concerning. Also, some of these other stocks, and which have been some of your leaders, had a pretty rough day yesterday. Not only, the insurers and the financials, but Apple was down $2 yesterday. Nvidia took a 3-point hit yesterday. Amazon got the beats yesterday. There was a lot of stocks that actually did get hit yesterday, in the overall market too, that don't have just direct hurricane exposure here. So, somewhat concerning that we didn't make a new high on the last move, and technicians will look at that and say, oh, now we've got the potential for, well, not even a double top, multiple tops up there in that, 20, well, I'm looking at SPY in that 248 area. And, now you get a pop back here. I think, this actually is a little pop that I think I'm going to be selling. Fading the rally today. Not very often I say I'm coming fading rallies of this S&P because it's so relentless, but I'm fading this pop today.
All right. And Brad, UK, asking about Barnes & Noble. BKS, expecting that stock to go back down. It just really hanging out here at the 750 level, has support under 7. Wasn't there some news? What was it, last week that someone had an interest in them? Or
yeah, we heard that when the stock was $25. We heard that when the stock was $15. Now we're hearing the stock when it was $7. There's always rumors that somebody's got an interest in Barnes & Noble. I'm going to say I just don't think any of it materializes. And I think BKS is lower when I look at it a year from now. Again, the same way we've looked at it, at 15, the same way we've looked at it at 25 on the way down. I'm going to say the same thing. Amazon has eaten their lunch. Obviously, put Borders out of business, and it's hurt a lot of the other ones too. Why do I want to own this? What is the catalyst besides the hope that somebody might be interested? Why do you really want to own Barnes and Noble? These classic bookstores. I don't. If you think everybody's staying in their homes, if you think everybody's moving, to buying everything online, bookstores at the top of the pecking order to not perform well in that environment. I have no reason to own BKS here right now. I think it's lower a year from now.
Brad's looking at it from the short side too. The only thing about shorting a low price stock like this is you got $7.45 of potential, but if some kind of news comes out or is your kind of thing, you really have unlimited exposure on the upside. I would just keep an eye on the 788 level, or maybe even give it to $8. Triple top, actually 4 highs between 780 and 788. So there's your resistance. And I think for really to get some people, heading for the exit, you need to get under 7. Not only get under 7, but close under 7. And the recent low of the move has been 685.
Only risk here too, we got an earnings report like Brad is saying, but what's the short interest on this thing? That's 8.5%, so it's not super high. It's not low, but it's not high. So I just checked it right now. So I don't know. I'm not coming here short in the stock at 745 either, but I'm not going to argue with those who are, because I think in a year from now, I think it's lower.
All right. Let's see. We got 2 stocks here. I want to cover the chat, then we'll do a quick ratings things. We'll do one for Dr. J, HDS comments here. And
been flying.
Yeah, that stock looks like it's pausing here in a rally. This is, let me bring up the stock, HD Supply Holding. I mean, it's knocking on the door here. Pre-market trading, we got a nice pop up to 3360. Is that hurricane related?
Was there a headline? Yeah, was there a headline here? Or is this Spencer? Can you just check, or is this hurricane related?
Right now, I don't see anything. Hold on, though.
Just because it's up pretty substantially here this morning. This could be another, this could be another hurricane supply or a hurricane.
Man, it's up 90 cents, but is there any volume on that? No, there's not a huge. A couple thousand shares have traded. I like it above 33.40. You had a double top, 33.40, 33.42. So let's see if we can get rid of the seller from there on this move.
I think it's a play on hurricane.
Play on hurricane, and then
so,
your other
one,
stop.
Yeah. Oh wait. I'm sorry, for HDS.
Yeah,
they had earnings.
Oh well, there you go.
Yeah, HDS had earnings this morning. 64 cents is in line. Actually, they were in line on both the EPS and the sales. And the guidance for Q3 came in higher for EPS and in line for sales.
All right. You see the trading in the pre-market. You want to see continuation to that pre-market high and even clear that stubborn high at 34.14. And then there's clear sailing up. You had a big down day. That big down day was probably back in June. Maybe that was on earnings as well. So big area here if you could clear at 34. Dennis, any ratings that we should talk about here with 3 minutes to go in the show?
There was a few. Spencer, is there one that was jumping out at you? I didn't write any of them down, but there was a few.
There's a lot of upgrades today, so let me just run through.
Yeah, I'll run through them.
Ones that caught my eye: U.S. Steel upgraded Bank of America.
Oh, that was yesterday.
Oh, look at that! See, I'm a day behind. Today's Wednesday.
There was a few other ones. I know ExxonMobil caught an upgrade today.
Here we go. I got my list now. ExxonMobil upgraded UBS. We got Thomson Reuters upgraded TD Securities. What else? Fiat Chrysler upgraded Barclays.
You have the symbols on those. Just
yeah. Okay. FCAU upgraded Barclays. XOM upgraded at UBS. Those are the two big upgrades for me as far as downgrades go. HPE just had earnings, so we talked about that. Mallinckrodt, MNK downgraded Morgan Stanley overweight, equal weight. That's it.
Can we talk on this ExxonMobil here for a second, Dennis? I know you had it a while ago. You let it go at 90. It's come back.
I want it back at 70. I'm not sure it's going to get there. So this could have like the Walmart thing. Remember, I wanted Walmart at 50 and only got down to 58. I don't know if I'm being too greedy here. It's starting to show a little life here too is the problem. It's a problem because I want to own it. 76 putting a hard bottom.
Yeah,
I mean, you have an out.
Yep, that was the exact words that I was going to use here. 76.05 was the low of the move. Then you touched it a couple other times. So institutions ganging up at the 76 level. So if you come back down, you're going to have to step ahead of it. Below 76.05. That's your out. Coming back on the upside, not a lot. See, how much are we trading up here in ExxonMobil? Trading up 62 cents. That's a big move for XOM. Let's go to the dailies. See if you get psychological level. Two tops over 78. So 78 and a quarter, 78.17. If that comes in play today, maybe see some sellers as it was a high at August 15th and August 16th. And, keep an eye on crude here. All of a sudden, we're back near that $50 area. I'm going to go a longer-term chart here with crude to just show all the times we've knocked our head against 50 over the last couple months. So that certainly could give a boost to ExxonMobil. All right, Spencer, let's wrap up today's show and let folks know what's on the docket for tomorrow.
On the docket for tomorrow is Mark Chaikin. He'll be on at 8:15. He's founder of Chaikin Analytics. And that's it for us. So hope you enjoyed our show today. Don't forget, you can catch the whole thing again on YouTube as it airs. Just go to youtube.com/BenzingaTV. Or you can catch a podcast on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket on any of those platforms. Don't forget about the Benzinga FinTech Summit coming up later this month. It's September 28th in San Francisco. bzsummit.com is the place to go to learn more about that. So have a good rest of your day, folks. We'll be back with you on Thursday.